Hey, welcome to Everything Meta. I want to give a huge, quick shout out to all of you coming in from your pop. I insanely appreciate all the support you guys have been giving me. You guys are absolutely incredible. I love seeing the ship army. Thank you all for being here. So today I want to take a little bit of a different approach and just talk about the market. I opened my portfolio this morning. I saw a lot of prices within the crypto market, within stocks, and it's been not doing too good. Shib is down 5%. Bitcoin is approaching 40,000. Ethereum, I saw it drop below 3,000 for a little bit. And let's just explore why this is happening. The main reason is Goldman Sachs, one of the largest investment banks in the world, recently released a report stating that the Federal Reserve is expecting to raise rates 4 times this year instead of 3 times this year. It's a little bit more aggressive than was expected. And why is the Fed, increasing the rates? It's because of it's because of rising inflation and the tightening job market. So with inflation, we've seen prices of consumer products go up a lot. Last year was about 6.8%. And at the same time, the job market is really tight. There's Unemployment is very low. Employers are having a hard time recruiting new people. They keep increasing salaries, but they're still having a hard time. Um, Now, why what happened with the rate increases is that whenever the rate does increase, investors tend to not want to hold as much crypto and stocks because they consider that to be a lot more riskier versus investing in government bonds, for example, which would have a higher return now due to a higher rate. So today, as it stands, this rate, which is the overnight borrowing rate, that essentially allows banks to borrow money overnight. It's anchored at between 0 to 0.25%. More specifically, it's at 0.08%. So it is a very very low number that it's all because of the COVID-19 and all the pressures in the market. The Fed's been trying to keep it very low to encourage activity within the markets. So what's important to keep in mind is that this Wednesday, um, there will be a report released indicating what the latest inflation rate is. As of last year was 6.8%, as I mentioned below earlier, and it's expected to rise to 7.1%. So like at this point, it's not going to be a surprise if it's at 7.1%. What is going to have a big impact in the market is if it comes higher than 7.1% or lower than 7.1%. So this is something that we need to be on the lookout for. Um, and with regards to the raising the rates, um, just last week, 63% of investors were expecting the rate to increase. Today, it stands at 90%. So what this also means is that like at this point, it's not a surprise. The market could go down, but it won't be due to these kind of newses because it's already like this news has already been announced. People are already It's on their radar. This is not new. So it's only when we get surprises is when we'll see big drops. Um, so we'll have to we'll keep that in mind. We're not like if the rate ends up being higher than expected, people might be freaking out a little bit more. It's gonna put a lot more pressure on the Feds to be more aggressive. If it comes down lower, this might provide investors a little bit more optimism. They might be a little more optimistic, and not pull out for the market as much. That's all I got for you folks today. Um, really, once again, I really appreciate you all being here. If you haven't hit the like and subscribe button, I encourage you to do so now. This will just help me kind of continue my growth. Uh, and yeah, if you guys have any comments, any suggestions on what I can cover about anything, please feel free to drop a comment below. I'd love to hear back your feedback. And that's all I got for you folks today. Stay safe.